Hello everybody, today I'm going to speak about Alphabet or Google following Q4 2019 financial results, and at the moment the current share price is $1,100. So let's dive in directly into the revenues. Okay, so as you can see here you have three graphs showing each of the last 4 quarters, so from Q1 2019 up to Q4 2019. This is just to give an overall view of the different gross margin, revenue increase, and also ratios of different um, items. Okay, so overall the gross margin is quite steady at 55%. The net income is between 17 and 26%, which is also very stable. The revenue grew 18%, I believe, year over year, but you can see also that sequentially it's increasing, so it's quite good. And overall, on the last quarters, the contribution on SG&A, research and development, is quite steady, okay? So what is interesting to see here is that is the research and development. 16% in an average of let's say of the total revenue reinvested into research and development. For me, this is a very, very important point. This is a huge, let's say, compound investment for the company, which is already betting for the future. So we will see that for the next slides, but this is for me the most important point of this revenue graphs. Now I tried to compile the overall subdivisions of revenues into the graph just to give you an idea of what's the ratio of the various subdivisions. As you can see, Google, so the web browser is the main contributor. Let's say more than 50% of the revenues is from Google directly. And then after you have around, let's say 20% will be YouTube ads and YouTube Premium. The rest of the revenue is split between network and cloud, which is still not completely significant, but you can see that the cloud is growing quite rapidly at this stage. Okay, here is just an estimation of 2020. It's just based on a linear regression of based on the last growth of the last 3 years, but don't consider it too much. It's just, for me, it was just an exercise. Okay, let's go to the balance sheet. So here, just to give an idea of the balance sheet, is I split items by items, the balance sheet, and basically made like a quick 4 marks for each item. So as you can see, the dark gray is for Q1, then you have Q2, Q3, and then the last one in color is Q4. It's to give an overall idea of what has changed on the balance sheet over this year. As you can see, not much for this company, for Google. They just increased on the plant property equipment from, let's say, maybe 70 to 84 billion. Overall, the cash equivalent, short-term investment, and receivable, the overall, let's say, liquidity of the company didn't experience any big change, and the long-term debt neither hasn't changed too much. So this is quite good. Let's say good balance, and also nothing, let's say, wrong in this balance sheet. Now looking at the cash flow, so I have put two graphs. The first one is for the quarterly graph, and then the last one on the right is for the years, the last years. As you can see on the left, it's a cumulative, let's say, earnings, accumulating, let's say, cash flow for each of the subdivision: operating, investing, and financing. What is important to see is that overall, over the last years, you have increasing operating cash flow, that the investing remains quite steady, around 30 billion, but basically they increase on the financing expenses. So I believe it's from more acquisition performed over the last years. Because they made more operating cash flow, they can afford to get more acquisition. But overall, it's like a wise way to use their cash, because at the end, as you can see, overall over each year, they have a neutral balance sheet, like a neutral net change in cash. So it's a good investment. They don't accumulate cash, they don't lose too much cash, they remain neutral. So this is quite also a good cash flow statement. Looking at the shares outstanding here, it's not really, let's say, relevant. I usually do that for the growth stocks that sometimes do a lot of dilution. But here, for Google, they don't invest into buyback, which I like. I prefer them to invest into research and development. So this is also a positive point for Google. Now let's switch to the summary. So here I just provide the overall identity card of the company, and this is what usually gives me the idea of, okay, should I invest or not? What is the most important here is to look at these three numbers. The first one on the left is basically, let's say, the free cash flow return of the company over the last 4 quarters. So basically, I just use the earning minus depreciation, and I divide it by the enterprise value, okay, which is here. I do the same exercise here for the last quarter, and I multiply by 4, just considering that it's equivalent, just to have an idea of where we will be going into the, let's say, 2020, what basically income or return we might expect for next year. And also the last column here, this 8%, is I use basically this free cash flow, this return, and I remove the R&D investment. This gives me an idea of, let's say, if the company is not investing into the future, how much would that yield? And we reach like almost 9%, which is quite significant, let's say, on my view. Looking at the different valuation, I don't see anything wrong for a 50% gross margin company that to have a EV to sale of 4, around 4. They have a good price to cash, which is less than 10, so it's quite good also. The ratio of long-term debt compared to earning is quite good. Is usually Warren Buffett recommends companies with a ratio less than 4, and here we have 0.9, so it's quite good. And also what I'm very interested into that is to see what is the efficiency of the company in terms of, let's say, revenue per employee. So usually a revenue per, like an average revenue per employee is like around $150,000 per year. But here Google has like almost $800,000 per year per employee. So it's quite good. I look also into the cash per employee. I like to do that during the crisis to identify if a company might have some, like, say, cash issue to pay their employees. And here you can see like Google has over $1 million per employee. So imagine we have a crisis lasting at least a year. The company will not have any issue paying all his employees. The last part of the ID card that I really like to look at is the overall growth of the revenue for each of the last years, and also the growth of the OPEX. And then I make like a comparison over the last 3 years, how much the revenue grew and how much the OPEX grew. This is to give me an idea of what to expect. Is it a high leverage? Do they increase their revenue but increase like even more their OPEX or not? And here, as you can see, over the last 3 years, the overall revenue growth was 80% plus, 80%, 79, and the OPEX was almost the same. So it means that basically they will grow, let's say, proportionally, but there will be no issue in terms of, let's say, scalability. It's not a big leverage, but as you can see, they have a good control of their growth, and they don't increase too much their OPEX, even though with all the acquisitions that they made. So I really like this ID card. Is to me, it's quite good. Now let's look into the basic summary. What I really like into the company is, okay, they have a good free cash flow generation. The first point is that they invest a lot into research and development. So you can consider basically this company as a value stock, but also as a growth stock, because they invest a lot into artificial intelligence. They might be able, because they develop it that much, that they might be able to sell it as a AI as a service, as a software, whatever, AI as a software as a service, sorry, to other companies. So it might be giving additional revenues. They're also looking into the quantum computing, which might open other sources of revenue in the future, which is excellent. Also, YouTube is still a very strong element of the revenue, which is growing at a 30% plus rate year over year. So let's see how it's going to behave during this crisis. But I believe that more people will be stuck at home and will look into this YouTube platform. The other point is a massive cash flow, cash per employee, so they will not have any issue to go through this crisis. And also they could use this cash to perform some acquisition. And especially during the crisis, you will have the market cap of many companies that will decrease, and that will be like a good, let's say, a, a prey, a prey for Google. So let's see how it's going to be like for 2020, but I believe it's going to be an interesting year for Google. The only, let's say, bad point that we can highlight for Google is obviously for the crisis, the advertising revenue might decrease, but I believe it's not going to be a big threat because it might be just temporary. Okay, so if you have any question, basically on Google, that's it. If you have any question regarding whatever, just let me know in the comments. And if you have any company that you would like to get analyzed, I can have a look also. Okay, thank you very much. Have a good day.